Ladies and gentlemen, welcome back to the channel. Have you heard the SEC wants to ban crypto staking? This is the latest news. I'm going to be talking about it today. We're going to be talking about how in the world do you survive a crypto staking ban coming directly from the SEC, particularly if you are a US citizen. And is it going to affect the rest of the world? We'll talk about that a little bit in this video as well. We're going to talk about exactly what could come under attack as far as crypto projects. Is this going to affect decentralized project? Is this going to affect only decentralized projects? We'll talk about that a little bit in this video as well. Also, towards the end of the video, I'm going to give you sort of my personal strategy on surviving this crypto staking ban. Make no mistake, by the way, this isn't official yet, but I've always thought something like this would happen, and I can give you more details on why I thought that a little bit later in the video. But I want you to understand something, that I do believe that this is most likely going to happen, and I believe it's going to happen this year or early next year at the latest. And that's my personal opinion. By the way, ladies and gentlemen, nothing in this video should be considered financial advice. I'm just a cryptocurrency enthusiast. I believe in this technology, and I believe this technology is going to change the world. However, I am not a financial advisor. Okay, so I believe cryptocurrency is going to change the world eventually. I'm a full believer. Those of you that have followed my channel for some time, you know that I absolutely love the technology. And I believe as early adopters, we have an opportunity to potentially get incredibly wealthy. However, the road to adoption is going to be more than bumpy, and this is proof of it. You know, the government is literally looking to fight back here in the US directly against cryptocurrency. And I think it's interesting because this article right here, Coinbase CEO Armstrong decrees rumors of possible US SEC ban on crypto staking. Armstrong flags rumors that SEC wants to get rid of staking. Coinbase earlier disclosed agency's probe into staking product. Okay, so I think this is interesting, and I'll tell you why. There's a lot of people in mainstream finance in the US that sort of try to play both sides of the government regulations here, or maybe both sides of the government, if you will. You know, Coinbase a couple of years ago, I actually talked about it on my channel back, I don't know, man, maybe 2019, 2018, way back then. Coinbase actually was working directly with the IRS to create a software product that they wanted to sell to the IRS that would allow the IRS, they literally proactively reached out to the IRS and the government and asked for a government contract to be created that would allow them to sell this software and their customer data to the IRS, or to the government, which of course would be the IRS, so the IRS could use it to track all their customers. From that point forward, I minimized it and eventually stopped using Coinbase altogether because I thought that was the exact opposite of financial freedom, financial independence. And I thought it was a cryptocurrency company literally selling out their customers. And now you've got where the CEO in the past, the CEO of Coinbase has tried to get into bed with the government. And now, unfortunately, that two-edged sword is attacking back, and now it's like, oh no, 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 the government shouldn't be doing this. It's kind of wild, and you gotta sometimes you wonder what people's motives are here. Obviously, they're just directly profit-driven, and I don't have a problem with being profit-driven, but I mean, have some principles somewhere in there for God's sakes. Let's keep going. I want to go through this article. There's a couple of articles I'm going to show you. This is the only one that I'm going to go through extensively, but I want to comment on this article. I want you to have an idea of exactly what's happening right now. Coinbase's global head Brian Armstrong escalated the war of words with the U.S. Securities and Exchange Commission, warning he'd heard rumors the agency wants to get rid of, quote, crypto staking by retail investors. I hope that's not the case, as I believe it would be a terrible path for the U.S. if that was allowed to happen, he tweeted on Wednesday, while arguing that the practice of staking is really an important innovation. And I think a lot of us would agree with this. I mean, there's a lot of debate about whether proof of work is the best path forward. And although I actually like proof of work, I can recognize some of the limitations. And I'm always open to new technological innovations that may improve the current model. In some ways, proof of staking in its current form or its future form could potentially do that. We just saw Ethereum switch over from proof of work to proof of staking. And if you ask me, I see this as being a direct attack against Ethereum. I'm pretty bullish on Ethereum, not financial advice. I'm pretty bullish on Ethereum, but this to me looks like a direct attack right back at Ethereum. The SEC declined to comment on Armstrong's tweets. The agency has repeatedly said that most digital tokens are securities that should be subject to its rules. Chair Gary Gensler has previously indicated staking could fall under the regulator's purview. Armstrong argued that staking is not a security. So here's the challenge with this. The government doesn't care. The reality is, if you look at the strictest letter of the law at what creates a security, most all of crypto could fall under security. Specifically, if you earn staking rewards or any financial rewards, it absolutely can fall under the most strict definition of a security. So it's challenging. I understand why people like Armstrong want to fight back against that narrative that it's a security. I want to fight back against that narrative as well. But I can clearly see a path forward for an overreaching government to call most of cryptocurrency a security. So if that happens, what do we do about that? We'll talk about that a little bit later in the video. Staking involves earning rewards by locking up coins to help order transactions on various blockchains such as Ethereum. Talk about a mild explanation. Coinbase, Kraken, and other crypto exchanges have waded into staking products to diversify revenue. The firms let users stake coins without needing specialist computer equipment nor having a minimum amount of 32 Ether and take a cut of the rewards. Staking on Ethereum can yield about 6%. Coinbase has flagged the progress of its staking services to shareholders. So here's the tweet right here. We heard rumors that SEC would like to get rid of crypto staking. I hope that's not the case. Okay, let's keep going. Last August, Coinbase disclosed that it had been probed by the SEC over its staking programs. The exchange is the second largest depositor of staked ETH according to the tracker Etherscan. The DeFi protocol Lido Finance is the largest. So Coinbase is centralized, meaning that it's a company that actually runs it. Lido is DeFi, decentralized finance. Now, this word DeFi gets thrown around a lot. Not everything that's called DeFi is actually DeFi. DeFi means that it's true decentralized finance that operates on a blockchain through various programs called smart contracts, and there's no central authority that's in charge of running the operations from day to day. Armstrong has butted heads with the SEC before, such as over a crypto lending product that the platform had to cancel due to pressure from the agency. See, I find this stuff interesting because as the SEC is supposed to be on the side of the individual. Now, I am always skeptical of that, but here's the reality. If the SEC was going to be on the side of the individual investor, then I would think being able to support a company like Coinbase, a very large, a public company on U.S. soil that has a lot of market share, that is easily scrutinized by a U.S. regulator, is far better to have a crypto lending product here with a company like Coinbase if the SEC was really looking out for the individual investor. Otherwise, what ends up happening is you have companies outside of the U.S. creating these products. And that gets much more difficult for the SEC to protect the average individual U.S. cryptocurrency investor. So you decide, is the SEC actually on our side as individual investors? Or are they trying to protect something else, like mainstream finance, mainstream banking cartels? I don't know. You let me know what your thoughts are in the comments. Staking services have gathered steam in recent months after Ethereum, the biggest commercial highway in crypto, switched over to the so-called proof-of-stake method of ordering blockchain transactions in September last year. The next phase of Ethereum's development, an iteration known as Shanghai, expected in March, will allow Ether holders to withdraw their staked coins. Both crypto exchanges and decentralized protocols have offered their staking customer derivatives tokens that are traded at a 1-to-1 ratio with the Ether coins they logged up for yields. CB the derivative token for Coinbase users, fell over 3% in the past 24 hours, with Lido's STETH and Rocket Pool's RETH dipping by around 2% respectively, according to the data from CoinGecko. Of course, Bitcoin is different. Proof-of-stake blockchains accounted for 23% of the total market value of digital assets at the end of 2022. Think about that. 23% of total market value was proof-of-stake coins. I mean, that would be a significant hit. If they consider proof of stake securities, the question is, how in the world are they going to expect decentralized autonomous blockchains to comply with security regulations? I don't think that's actually possible. I think if they go through these regulations, and I predict that they probably will, then ladies and gentlemen, understand this is going to create a massive bear market potentially. So the question is, how in the world do we survive this? Let's finish up, then I'll talk about that. An SEC clampdown could drive investors away from centralized exchanges like Coinbase to decentralized staking services such as Lido and Rocket Pool, which may be harder for regulators to pin down. Now, I think this is a little bit naive. A lot of people will say, "Hey, and because of these regulations, then expect decentralized staking services to boom." And initially that may be true, but those of you that are familiar with the government regulations of decentralized projects like Tornado Cash, I mean, Tornado Cash still exists. Tornado Cash is still around. It is fully autonomous. It is 100% decentralized. But they basically made it illegal for U.S. citizens to use Tornado Cash because they considered it a I'm not going to say it right, SDN, especially designated national, I believe is the term, that basically is designed for terrorist organizations and individuals. But the government literally went and classified a piece of software code for the first time in its history as a specially designated national, which makes it illegal for American citizens or American companies to do business with any SDN. Again, the purpose in that regulation or that law or whatever is designed to prevent, corporations from doing business with like North Korea or Iran, for example. But yet they named a piece of autonomous code as a SDN. And now what's going to end up happening is basically people stop using. They don't have American citizens don't have access to the privacy services of a project like Tornado Cash, and most people choose not to use it. So I think that I don't think this is going to be a big boom for decentralized services. I think most Americans will just choose not to use them for now. That's my opinion. Coinbase was pummeled last year by a rout in digital assets and the fallout of the collapse of rival FTC. Of course, Coinbase shares sank about 86% in 2022. Just like the rest of the market, the rest of the crypto market, they have pared some of those losses by almost doubling so far into 2023, alongside a rebound in crypto assets. Coinbase fell as much as 8.9% on Thursday. Okay, just a couple more news stories for you to take a look at and be aware of. Sorry, crypto world, but SEC isn't backing down on regulation by enforcement. So this is kind of crazy. This is from February 8th, which I think was yesterday, right? Yes. For as long as I've been covering U.S. Securities and Exchange Commission litigation against crypto targets, the industry was harshly criticized the commission for bringing one at a time enforcement actions as a way to set crypto regulatory policy, instead of engaging in formal rulemaking or waiting for Congress to pass legislation that clarifies when U.S. securities laws apply to digital assets. So this is really interesting. Several years ago, it was common in the cryptocurrency community to say, hey, legislation is going to have to come out. They need to come out with laws. It's going to take a while. We don't have anything to worry about. And even back then, being familiar with the SEC, I'm like, yeah, all this is going to take is the SEC coming out and making rules. But here's the challenge. They're not even coming out making formal rules. By the way, if you're not aware of how this works, a lot of these three-letter organizations, the FTC, FDA, the SEC, they can just make rules or regulations. This is done arbitrarily, and they're as important or as effective of laws in most cases. So the SEC hasn't even come out and formally made a rule here. Rules don't require the government. This is just a few people on a committee basically agreeing to it. I mean, there's a formal process in place, but basically that's what it is. A few people on a committee making a rule. So the SEC is getting criticized because they're not even making rules. And what's interesting about that is they're literally cherry picking crypto projects and assets to go after. And this is a challenge because what they can do is they can choose the ones that have the least amount of funding or the least ability to defend themselves financially. For example, the SEC went after XRP. That hasn't went well for them overall. XRP had a ton of money. They hired incredible lawyers, and it's just not going well overall for the SEC. It's going to be very interesting to see how that is finalized here soon. But if you look at a project right here like Odyssey, so Odyssey is a decentralized library alternative. I'm sorry, decentralized YouTube alternative. SEC charges LBRY, LBRY was a token, over a token offering that raised $11 million. They did this in 2016, 2020. Now, this is one sketchy lawsuit that went down, and the SEC won this lawsuit because LBRY didn't have the war chest of funds that somebody like XRP has, for example. That's my opinion on why they lost. But it's insane. LBRY, the LBRY token, they created the Odyssey platform. It is still in its existence. The company I think is basically out of business, but the platform is still in existence for the most part. The blockchain is in existence. It was a fully decentralized video sharing platform. In fact, I should see if I can reach out to the CEO, or maybe I don't know if he's still the CEO. It might be the former CEO, and bring him on this channel for an interview. However, what's crazy is the LBRY as a company, they reached out to the SEC before the company even officially truly launched. They reached out to the SEC because they wanted to be proactive with compliance. They wanted to be one of the good guys. They wanted to be one of the white hats. They wanted to make certain that we're operating in such a way that, we're doing everything right by the SEC. And the SEC ignored their request for guidance, just completely ignored them. And that's interesting. I've heard of this happening several times over the years in various industries, but it's not shocking. And typically they won't give any guidance. And that's, I mean, in one hand, I praise the LBRY token team for even moving forward, because it can be hard as an entrepreneur to move forward when you're not certain if what you're going to do is compliant. And LBRY moved forward in a very ethical way. They raised $11 million in an ICO. Well, eventually ICOs were frowned upon. But this was back in 2016. Nobody frowned upon. They raised $11 million. Do you know how many ICOs raised $100 million, $200+ million, and nothing has ever happened? The SEC has never gone after those projects. What's crazy about cryptocurrency and the SEC's enforcement right now is typically the SEC goes after companies where there's been victims. Most of the time, these three-letter organizations, the SEC, etc., they're all complaint driven. Just like with the case of the SEC going after XRP, when they filed the lawsuits against XRP, there were no losers in XRP. There were no victims. People who bought the XRP token had made a lot of money. That was the SEC bringing unilateral enforcement against XRP. Same thing right here with LBRY. The LBRY organization, company, for lack of better terms, the actual company behind the LBRY project actually reached out to the SEC several times. They had in my understanding, it was every 6 months they were reaching out to the SEC requesting guidance. Now, eventually, they did get a response back from the SEC, but it was really vague. It was like, "Hey, we don't have any guidance for you, but we think what you're doing might not be legal, but we don't have any way to tell you what to do to make it legal." It was kind of that sort of response, and it's like, what do you do with that? So they continue to go forward. Now, eventually, the SEC filed charges against them, and a judge said the SEC basically won. And it comes down here. Right here, if we lose, the Odyssey tweet said, this is way back in 2021, if we lose, the entire blockchain crypto space in the US is dead. They brought the case against us because our project is the biggest. It was the biggest decentralized video sharing platform. Someone else came down here and said, aren't you decentralized? What's the problem? Well, the problem is this. The problem is, yeah, they're decentralized. Sorry, I didn't mean to do that. The problem is, yes, they're decentralized, but it still hurts the overall project. It still makes it potentially illegal for U.S. citizens to be able to interact with a project. And this, by the way, this news story is an old news story. This is back when they were first, having the first getting charged by the SEC, essentially. And what I'm saying, the conclusion was they actually lost that case. But Odyssey is a great example of a company that tried to do everything right, and it's still not exactly clear on why the SEC chose to target Odyssey in the first place. I mean, their token wasn't sold on a lot of exchanges. It wasn't super liquid. But they were successful at being a truly decentralized video sharing platform. And of course, the platform still exists, but less and less people are going to use it when there's not a company pushing it, promoting it. Now, to my knowledge, they haven't made it illegal to interact or use the Odyssey platform. I use the Odyssey platform myself sometimes. It's a great backup, for example, for YouTube videos and that sort of thing. But people act like just because you're decentralized, you're in the clear, and that's not the case. Again, Tornado Cash still exists, but it's not good for us as individual investors. It's illegal for us to use it. How many of us are going to take the risk of using something that's been found illegal to use, for example? So people say, "Oh, you can't. They can't. Government can't destroy blockchain. They can't destroy blockchain, but they can attack it." So this goes back to the argument of, so are people going to run to decentralized exchanges? And my answer to that is maybe in the short term, but in the short to medium term, no, most people aren't going to use decentralized exchanges. They're not going to start using decentralized exchanges until people get so fed up with government overreach that they're not going to care that they're breaking the law. And I think we are a long ways from that for most American citizens anyway. So, how in the world do we survive a possible ban on crypto staking? And by the way, not just a ban on crypto staking, an all out attack really on the crypto industry, because I think this is the first shoe to drop. When you start talking about exchanges, centralized exchanges right now are starting to come under more scrutiny, and there's been some news stories about that. I think decentralized exchanges will actually be next. And so as cryptocurrency investors, it's like, okay, what do we do with this? Do we no longer invest in cryptocurrency because we fear regulation? Well, personally, I believe that's the wrong approach. And I think it's the wrong approach for a few reasons. First of all, my ethos for cryptocurrency, my belief in this technology, it says I want to participate in this space. And that's me personally. Now, as an investor, part of the attack on crypto is allowing the earnings on crypto to be quite high. I have several projects that I'm investing in that are earning real yield from 20% all the way up to 50% to even 100%. I talk about it in this video course here. I'll put a link in the description on one particular classification of project where I'm earning between like 45 to 100% APR per year in real yield. And part of the reason that we're able to earn that real yield on these projects, 20%, 30%, even 9% on staking coins. 9% is still a lot. If you believe in Ethereum and you can get even 6% on Ethereum, for a lot of people, especially if you're holding a large bag of Ethereum and you're bullish on it long term, 6% is a big deal. I mean, that's free money that you're literally getting. And you can't get anything. I think I checked my checking account last week just to see if I was getting any interest. It literally said I'm getting like 0.000019% or something silly like that. So getting 6% compared to traditional finance, 6% is a lot. 30% is out of this world. 50% is amazing. 100% is just insane. And if you're in this space, you can ask yourself, how come other people aren't taking advantage of these crazy earnings? And it's because the regulation pathway is not clear yet, and people are nervous about that. So once there's very clear regulations, and once I mean a lot of companies, a lot of crypto projects are going to fall to the dust when that happens, and there's going to be very few to survive, in my personal opinion. I mean, they'll survive in the sense they'll still exist, but thrive having customers and users is a whole different ballgame. So if there was a clear path forward, and even if the government said, hey, decentralized finance is okay and it's all great, and we basically support it as a federal government as a direct competition to government controlled finance, if they somehow came out and said that, which I'm not optimistic of that, but if they did say that, then I think you would see a lot of these APYs and APRs drop significantly just from more people. I mean, I can tell you the projects I'm in earning 40, 50, 60, 80, 100% APR. I mean, I bet you they would drop down to like 10% or less because so many people, big finance would come in and earn these kind of returns. So part of the murkiness in this space is why we're able to earn so much. So I don't think it's about getting out of crypto altogether. even as an investor. Part of my ethos is I believe in it, but even as an investor, I don't think the goal is to get out of it. So what do? How do you survive these murky waters um, that are coming? Because right now they're not making crypto illegal. They're just gonna possibly there's a possibility of banning staking. So I think there's four things that you need to make certain that you're doing right now to survive a possible crypto staking ban. And it really comes down to how you apply money management and risk management. And this isn't advice for you. This is advice. This is actually what I do personally. So number one, crypto is always a small percentage of my overall investment capital. And a lot of people say this, only invest in what you can afford to lose. I hate that term because none of us are actually looking to lose money, but at the same time, it's a small percentage. I mean, you're talking about 5 or 10% of your portfolio, maybe 15 or 20% if you're bullish, but you got to understand that's a high risk individual who's willing to put 20% of their portfolio into crypto. Unfortunately, a lot of young or new investors in crypto take crypto and they use it as if it's some sort of a lottery ticket. They're literally trying to, put as much as they can into one project, hoping it's going to go to the moon. And then it doesn't, or worse, it collapses, or even worse, it rug pulls. So you and most people jack up diversification. Your the largest percentage of your portfolio needs to be in good stable investments. By the way, that's anything outside of crypto. That's real estate. That's your dividend stock, stuff like that. Your cryptocurrency investments, I don't care how much you believe in the future of Bitcoin. And I'm one of those guys who believe in the future of Bitcoin. You should not be putting, in my personal opinion, 25, 35, 40, 50% of your net worth into Bitcoin. I think it's crazy, even if you are a high risk individual, just because you're literally risking your future on this assets. Listen, I believe cryptocurrency. I'm the guy who believes long term crypto wins. I believe one day we'll get to the place where average citizens don't care about government laws and overreach. And therefore there's a bit of a financial revolution that can happen. I believe that actually is going to happen one day. But I don't know if that's going to be 5 years or 50 years. I would not put my future financial well-being on the line by trying to put 50% of my earnings into something like Bitcoin. So make certain that crypto, number one, is a small percentage of your overall investment capital. And by the way, that's even if you only have a couple $1,000s to invest. If you have a couple $1,000s to invest, then go put it in a dividend stock or something, some sort of blue chip investment. Go buy gold with it if you want, but don't put more than 10 or 20% of that into crypto. I mean, I could do a whole lesson on this. A lot of people have a small portfolio and they think because they have a smart portfolio, they should be more risky with it. No, you should manage your small portfolio as if you were a $1 billion hedge fund or some sort of $1 billion family bank. The same money management rules should apply. Otherwise, you end up taking high risk, volatile plays, and eventually they will always catch you in the end. So keep your crypto investment small. Only invest a small portion of your portfolio, ideally 5 or 10%, really. Number two, diversify. Now, this is a phrase a lot of people think they understand what diversify means. Let me go into depth here. I'm talking about diversify in various different types of projects and various different types of cryptocurrencies. Diversify across different blockchains. Diversify with different investment strategies. So there's a buy and hold strategy, there's a staking strategy, there's masternode strategies, there's trading strategies, right? There's real yield income strategies, for example. There's all sorts of strategies, if you will. You want to make certain that you are diversified across projects, across strategies, across blockchains, which I said that. I wouldn't recommend avoiding staking. A lot of people may think, hey, if staking's coming under attack, do I avoid it? I mean, I think you have to be aware of the risk. Don't ignore the risk. Don't assume that staking cryptocurrencies will not be made illegal. At the very least, it could be made illegal for U.S. citizens. Listen, if the SEC came out tomorrow and said that all staking coins, proof of stake coins, are securities, and you need to be an accredited investor, basically you need to be wealthy to invest in it, similar to commodities, you have to be an accredited investor to invest in commodities, then suddenly the average small investor it's illegal for them to be able to invest in Ethereum, for example. That's not going to cause Ethereum to disappear. It may cause the value to plummet, but it's definitely going to make it difficult for US citizens to invest in Ethereum. So you just, I wouldn't say avoid staking, because at the same time, this negative news is going to keep a lot of people out of staking projects. And for some projects, that means the APR, or the annual percentage rate, is going to be a lot higher. So I wouldn't say avoid staking, just be aware of the risk. Here's another one: diversify between decentralized exchanges and centralized exchanges. You really should never leave a lot of your funds on a centralized exchange, but at the same time, be very careful with decentralized exchanges as well. I would say use a combination of decentralized exchanges and centralized exchanges. And the reason is because we don't know which way these regulations are going to cut just yet. If you're earning yield on a centralized exchange, that may be what they say is illegal. They may say earning yield in a decentralized exchange for now is legal. And I say illegal, they may not use the word illegal. They may just say you have to be an accredited investor. So, but they make it difficult. So I would not, if you're going to, I would definitely diversify between exchanges. There was a time period where I felt like centralized exchanges working with the government might actually be a pretty good place to put your crypto, because I figured that mainstream finance might get into the exchange industry. And if they did, and the government regulated those exchanges, then there would be some protection there, and those exchanges would be less likely to be, shady, if you will, because they were under the US regulations. Now I'm beginning to think, I don't know. Maybe centralized exchanges aren't, from an ethos standpoint, we always prefer decentralized exchange. Not your keys, not your crypto. I always prefer to use decentralized exchanges. But trying to figure out how to walk the tightrope of future regulations that aren't even in place today, and trying to read the tea leaves a little bit, I think you need to diversify also between the different types of exchanges, and maybe more than one centralized exchange, or use more than one decentralized exchange. Specifically, if you're in liquidity pools, yield farming, and if you don't know what that is, then that's for another video. But if you're in those sort of products, then try to yield farm on more than one decentralized exchange, for example. And that's just good anyway, in case one somehow or another were to get exploited. So you want to make certain crypto is a small part of your portfolio. Point number 2, diversify. Diversify across projects, strategies, blockchains, cryptocurrencies, exchanges, decentralized exchanges, etc. Number 3, and this is going to sound like I'm being contradictive here, and I'm not trying to be. But number 3 is don't over diversify. So here's the thing: it gets very expensive in crypto if you over diversify, specifically with a small portfolio. What do I mean by that? Well, if you only have $200 to invest in crypto, you don't need to take that $200 and try to invest it, 10 different ways. The fees alone are going to hurt your potential return. So, based on the size of your investable capital or portfolio, be aware of the fees you pay for transactions, and don't over diversify. Choose the product or products, and I'm not going to give you any specific advice, but choose a product or products that you think may hold up well. Maybe something like a Bitcoin or some sort of proof of work coin, potentially, maybe something like that. But again, just don't over diversify. Be careful for that. And that's really based on the size of your portfolio and being aware of potential fees and whatnot. Number 4, so we talked about keeping crypto investment portfolio small, diversify, don't over diversify. Number 4, and this is the last and final point, and then I'll touch on one more thing. But number 4, profit taking strategy. So I've been the guy who says for a long time, I'm not worried about taking profit in crypto. I'm not worried about taking profit in crypto. And the reason I said that is because I just believe so much in the future of crypto. And if I'm using a small portion of my portfolio, it doesn't matter. Like that's what I've always said before. It doesn't matter. It doesn't matter. But now looking at regulations, I really have a different viewpoint than I thought in the beginning several years ago when I started investing in crypto. I never really thought I would have this mindset. So I'm changing a little bit. And I'm going to say have a profit taking strategy. And I'll talk about some different profit taking strategies and what I mean by that. But I want to explain why I've changed my own sort of thoughts on this. First of all, the cryptocurrency is incredibly volatile. Bitcoin's been up to 60,000. Today we're down to 22,000. We've been all the way down to whatever we were, below 20,000. So here's the thing. My one of my overall strategies next time we hit the all-time high, which I believe will happen at some point in the future, next time we hit 60,000, from that point forward, and many of you know that I earn passive income in cryptocurrency, I earn trading profits in cryptocurrency. I've always took those profits in crypto. I've very rarely left those profits in, you know, US dollar denominated cryptocurrencies like USDT, for example, or USDC. Going forward, once we hit all-time highs, I'm going to start making certain that I keep about half of my profits that I earn, whether it's trading or in passive cryptocurrency or anything else. I'm going to take half those profits directly into US dollar denominated tokens. And there's a couple of reasons for this. One is to insulate against a cryptocurrency bull market or bear market, I'm sorry, that's going to most likely come from further regulations in my personal opinion. So I want to make certain that I'm not putting so much. I mean, listen, cryptocurrency, eh, this can change our lives. I mean, in so many ways, it's already changed my life. So I don't want to risk but so much of my financial stake. So we hit all-time highs. I'm going to start taking half my profits in US dollars. I may not withdraw all of them, but I'll at least hold them in US dollars. Reason being because next time we pull back, say 50% off new all-time highs or more, then at that point I'll start using that US dollar denominated token and I'll start buying up cryptocurrency, Apex assets, the Bitcoins, the Ethereums and tokens like that I'm bullish on long term. That's one profit taking strategy that you could have, something like that. Another profit taking strategy is on my passive income streams, I have specific goals. And as I hit those goals, I withdraw a certain percentage regularly. Now, this is new for me. I never ever did this for so long. And I don't like that I'm doing it now because I believe in the future of cryptocurrency. And I want to have a huge portfolio long term. And if you're thinking, Wealth, how can you have a huge portfolio if you're talking about keeping crypto a small percentage of your investment capital? Because I'm not bringing in additional capital. I'm not doing I'm not doing a strong rebalancing of my crypto portfolio. I haven't actually added US dollars to my portfolio, new US dollars from my fiat bank account in, I don't know, it may be 18 months or more, maybe 2 years plus now since I've done. In fact, it might have been before 2020 since I did it last. 2019 may have been the last time I did that. But for the first time ever, I'm looking at on the passive income side, withdrawing some funds to US dollars. And the reason is because of coming regulations. I mean, listen, if they pass strong regulations against cryptocurrency, I believe we could see this market tank, 80% off all-time highs of where we're at. I mean, I'm sorry, 80% off of current highs. I mean, you would be talking about Bitcoin $5,000 or less. If there's strong US regulations against things like staking and decentralized finance, and they're like, all you can do is hold Bitcoin with the JP Morgan, for example, I think this could collapse the market. So I hate not to pull some funds out when we are not under those regulatory environments right now. And I want to be able to have those funds in other traditional investments, passive income investments, that I'm able to take those funds. And then in the future, if we do see some sort of catastrophic regulatory environment, then I can take those funds and I can start buying back in again. Because keep in mind, I will always be a long term bull, therefore a long term buyer of Apex cryptocurrency assets. That's just me. So, ladies and gentlemen, I believe that's the key to surviving a crypto ban. I mean, a crypto staking ban. I believe it's proper money management by making certain that crypto is always a small percentage of your overall investments. Make certain that you diversify across all projects, blockchain strategies, everything, but then don't over diversify and make certain that you have some sort of profit taking strategy. Ladies and gentlemen, let me know down in the comments. If you're still with me, just say down in the comments. I'll watch the whole video and let me know. Do you believe the SEC is going to follow through? And do you think they're actually going to ban staking crypto assets? Let me know your thoughts down in the comments. And if you haven't done so already, do me a favor. Please smash that subscribe button, click that like button, hit that bell notification icon, and click all. If you want to learn how I'm earning some passive income, there's a free course down in the description. Check it out. Ladies and gentlemen, decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.